Good morning, everyone, and welcome to the weekend update. We got a lot of stuff to get over, so let's jump right in here. We're going to look first off here at the Dow 1 hour chart. Ugly market on Friday. We've got a lot of events piling up on each other, namely the economy sucks. It's not as good as everyone's saying, and we continue to just screw this coronavirus issue up massively. We are now leading, like we did last week, in every category, which is not a good thing when it comes to this virus, and it's starting to impact the market. We also have quarter end coming up this week on June 30th, and that is probably going to be a crazy day or two as pension funds do their rebalancing, and you've got the big hedge funds who've been underperforming this year will be dumping the underperformers and trying to chase the leaders so that they can con their investors who own their funds into thinking that they actually did well in the last quarter. But let's jump into the chart here. This is the 1 hour chart on the Dow. And you can see here, yet again, as I pointed out, all the red, which is selling bars, continue to be greater than the green bars. Now, we could see somewhat of a bounce here. If we flip over, here's a better view here on the daily chart. The 50-day moving average has yet again supported the Dow daily chart. Now, back in May when we got back down here, it looked like we were going to implode, and the Fed came in and up we went. So it's going to be interesting to see what happens here early this week. We do, as I said, continue to have way bigger selling on these up days than the down day, or on the down days than the up days, and it's a classic sign of distribution. Whether it's going to see an impact in the market remains to be seen, but I wanted to show you guys a different chart because all we keep hearing about is this V recovery, and all the reasons that we keep hearing about it is because it's an election year and you got a lot of desperate people who want to keep their jobs in Washington. This is a chart of the 2008 crash, and this is something I refer to all the time, how what we are seeing right now, the damage that is out there, it's just 100,000 times worse than what was back in 2008. I don't care what anyone says. If you read the data out there and don't watch the election news, things are bad out there. These jobs are not coming back for a while, unfortunately. Now, the reason I bring this chart up, this was the initial sell-off back in 2008. And then over the next 3 months after that sell-off, the market was able to claw back a lot of those gains. And then if you were there back then, everyone thought things were hunky-dory, and then the real implosion began as the data continued to pile up being negative. We are looking at a similar setup here. Now, large caps are going to be in trouble. That's just my view on that. But the sectors that we play, the micro caps, because we've got a story. The reason the market is selling off this time is because we've got this nasty virus going around. So we have sympathy plays, as I've said, just based on that. And in times like this, the micro caps tend to outperform as money flees the large caps and comes down to the lower caps. So just a reference point, when you keep hearing on TV about the market going back to new highs soon, I highly doubt it. We already have a roadmap. History repeats, and our roadmap is 2008. Just last point on this, there's almost 5 million mortgages in forbearance/default now. I believe that is more than what we had back at the height of 2008. Just let that sink in for those who continue to say that this economy is fine. So let's jump into some stock charts right now. FRSX. We just have so much research on this stock. I'm not going to go over that. You can just read the alerts we have in the alert room, but this chart is locked and loaded. If these guys come out with a press release tomorrow, we're off to the races. As I said, this stock has a tendency to pop early on Monday. So let's see what we'll get here. We've got a very, very nice uptrend support right now. 150 or 145, the 50-day moving average should be the extreme bottom on any dip on this stock right now. We've got RSI ticking higher. Look at that nice MACD cross there. Looking really, really good going into this week, especially if we get that press release. If they launch that big-time thermal scanner, we're in business. And then the other thing, on Friday, Amazon bought out Zoox for $1 billion, self-driving car. This is the tech. This stock is in the two hottest sectors we have right now. seems dirt cheap, especially when we look at some of the peers like Mark and the valuation that stock's trading at. Gishi. We've talked about Gishi over the last few videos, and it still continues to sit here because they refuse to put out a press release. But when we see this kind of tight, back and forth consolidation on a chart, especially on ones that were waiting for news, usually when that news comes, everyone breathes a sigh of relief, and then the chasers come in and chase the snot out of it. So 50 cents is where they'll come in, but we get a press release, and I can easily see them chasing this at 60. We still haven't gotten that positive MACD cross yet, so that is a very positive sign here. And again, this stock is another COVID play, and a play on the issues that we're going to see if the hospitals continue to fill up. So this chart is just waiting for a reason to run. Cockpea. We saw some huge moves on the virus stocks on Friday, but still, these guys have not put out that press release yet. It's still trading in a very nice range. Right now, looks like around the 140, low 140s is really strong support on the stock right now. We've got excellent momentum on the momentum indicators. So we're just in wait and see mode on this stock for a press release. AIKI. This was a new swing play midweek for potential news on their human trials. Now, again, I have the research on this one. The University of Maryland, who these guys have licensed their COVID drugs, is now recruiting for their human trials. So that tells me we've got a press release possibly coming anytime from this company about it. Now, we had a big pop on Friday because we had the COVID plays, and then these guys are smart enough to drop a press release. Now, it was with regards to cancer, but, you know, a lot of these stocks have lots of different things going on. You can see here, popped all the way up to the 200-day moving average. That was our first target area. I mean, that is classic sign, or classic way. When I did that moving average video, this is why we use moving averages. This stock ran all the way up, bumped into this, and then came back down. So the next breakout level will be when this one closes above the 200-day moving average. Again, we get that COVID press release on this stock, and we're looking at a very, very nice upside move on this stock. All the indicators look very, very nice right now. This is an accumulate stock, anywhere around the 70s to 80s area on any dips. That's at least what I'm thinking going into this week. Bingo Bongo. BNGO is setting up very nicely. Now, there was something I liked here. We've got stochastics down here in the basement. All the while this stock is in a nice uptrend. We've got excellent support right now at the 44-cent area. The target remains the same, 200-day moving average. And one thing to note, like I talked about on the Dow, remember where I was telling you guys earlier in the video how we had the red days were bigger than the green days, indicating distribution? Check this one out. Look at the size of these green volume days on this stock, and then the red days, the volume is like a fraction of it. This is an excellent sign for this stock. This is accumulation. You've got huge volume buy days, small volume red days. That is a sign of shares moving from weak hands to strong hands. It's just a matter of when they let this one go. Now, on Friday, we had a new swing play, a new COVID play that I expect to have news very, very soon. This is an accumulate stock, anywhere in the mid to low 50s. Breakout is 60. I just have a target up here of 75 cents, but if we get a press release, who knows how high they will chase it. This is the cheapest vaccine stock out there right now. We've got a nice uptick on RSI. We've got an upcoming positive MACD cross, and stochastics are down here in the basement. Again, I'm not going to go over the exact research on this one. You can see it in the alert room, but this one is a new swing play that we're going to keep a strong focus on. We're going to be accumulating this one. At least I am. That's the plan going into this week. GPAC, GPAC. This is the company that is buying the NFL Hall of Fame. It's a DraftKings type play. Went all the way back down. Everyone thought this stock was toast here this week, and then we got that nice pop back on Friday. Now, if we go and look at the daily chart here, when I talked about this stock a couple of weeks ago, I said this was the kind of action we were to expect on it. If we looked at what DraftKings did into their shareholder vote and approval of the merger. Let me pull that up there. DKNG. This stock did a similar back and forth thing, and then look how high it ended up running up. So GPAC, their shareholders vote is midweek, June 30th. So this should be a very active stock this week. AYRO. This has to be one of the most undervalued electric stocks out there. I don't know what else to say. They're starting to tweet. I'm thinking we're going to get news. But the reason I bring that up is I've been telling everyone for the last few days that I thought IDEX was ridiculously valued up here at 4. I mean, we played it down here. I said, stay away. But some guys married the stock for some reason. We ended up getting puts. Look at the implosion on this one. But this stock was valued at $500 million, and we're not even sure it's a legit electric car company. And then we have the one that we're in, AYRO, and you can't give shares away on this stock. Press releases, and it'll be off to the races on this one. Space B, with the states shutting down, this one is back in focus again. I can't believe it actually gave us an opportunity to get back in here under the $2 range. I'm going to flip over to a different chart here. I'm showing you, this is when we got into this chart back in May, and we had a deep oversold set up on MACD and stochastics, and then the stock, we had 2 targets on this one, blew through both of them, ended up going even more. It ended up going up 200%. It's come right back down again. We've got MACD deep oversold. We've got this nice setup. We'll probably see chasers over too, but this is an excellent pickup here. The chart looks identical to what it did right before that big move. So that's looking really good into this week. Quick mention on INUV so that I don't get 9,000 messages on Friday about or Monday, what about INUV? We're still sitting and waiting on this one. It's all the way back down almost to its 50-day moving average. They've got that shelf offering out here, but I don't think they're going to do any kind of offering below the last one. So this one's deep oversold. This week, I'm going to be keeping an eye on this one to pick up some more shares. Last but not least, HTGM. We're back to the support line here. What was I looking at? Stochastics is nicely oversold. This is another one. We're just waiting for these guys to actually tell us about their COVID-19. We know about it. Most traders don't. It's going to be one of those situations when they drop a COVID-19 press release, they're chasing up here in pre-market. So that's it for the video, guys. Oh, I forgot. I need to put a discount code in. So the code for this week's going to be just 3838, and that'll give you $38 off the monthly plan if you want to come in and try the chat room and see what it's all about. So thank you for listening to this week's update. Please indicate if you like the video or not, and definitely subscribe, guys. And I will see you all in the chat room on Monday. Bye.